Hi guys, welcome to What Stock, where I tell you what stock I'm buying next and why. Today, based on your requests, I'm going to tell you the best stock to buy to get exposure to the robotics market. I'll do a quick run through of the market opportunity, who the major players are, and finish with who I'm investing in and why. If you make it to the end of the video, I'll give you a great buy price to watch out for, and I'll give you a quick snapshot of my portfolio. But before we kick things off, make sure you hit subscribe and ding that bell so you never miss a What Stock pick. The robotics sector, or automation sector, is on track to see explosive growth in the future and is fueled almost entirely by their desire to kill all humans. I am of course joking, but removing the human element from the production line is a huge value driver for companies looking to reduce cost, speed up manufacturing processes, and increase the general health and safety of their employees. And one of the quickest ways to do this is to remove the good old-fashioned human being and replace it with one of those big industrialized robotic arms that you see. As a result, it's a market that's expected to see huge exponential growth and a great place to park your cash if you can find the right company to invest in. Before buying the stock that I'm about to share, I looked at 27 companies that were beneficiaries or innovators of the automation market. From that list, I shortlisted the 10 that I liked the most based on their go-to market strategy and product offering, and how sticky they are. These are the companies that I shortlisted as potential investment opportunities. As you can see, we've got some pure robotics players like ABB and Rockwell Automation, and some complementary robotics players like PTC and Zebra. In any case, you could probably put your money into any one of these 10, and there's a reasonable chance that it's going to see significant growth over the next 10 years. But as I am the Evel Knievel of armchair investing and only invest in one stock at a time, strap yourself in for my What Stock Pick of the Week. Aspen Technology is the world's leading supplier of asset optimization software solutions. They have more than 2,300 blue chip customers, employ 1,600 staff, and have more than 38 years of technology innovation under their belt since they spun out from MIT. These guys help companies manage their asset optimization. The little cogs, shoelaces, and paper clips that keep those big robotic arms moving also have a shelf life and are susceptible to the elements. And as such, there needs to be a strategy in place to monitor the overall health of these components. As investment in smart automation rapidly increases, and companies like Amazon keep spending billions of dollars on warehouse automation, companies like Aspen are going to see exponential growth in the future. But enough with the niceties, let's see how the numbers look. In the past 10 years, Aspen's share price has grown on average by 25% every single year. And that even factors in the nosedive that the share price took this year along with the market. This could present a fantastic buying opportunity. When you factor in the loss in sales that the manufacturing market has seen this year, they've still managed to grow their top line by over 10% for the last 10 years, beating iRobot and Intuitive Surgical. When you also factor in the loss of earnings, they've still managed to grow their bottom line by 15% every single year for the past 10 years. And they've ramped that average up to 25% in the past 7 years. This beats Zebra and Rockwell. All things considered, they've still managed to grow their free cash flow, the thing we care most about as investors, by over 25% a year, beating Cognex and Deere. This was also the best number that I saw out of every company I looked at. Amazingly, they've managed to sustain a 19% free cash flow growth rate in the past 3 years, despite everything that's happening in manufacturing. In the past 10 years, they've grown their book value, the second thing we care most about as investors, by over 10% a year, ramping that up to over 64% a year in the past 5 years alone. This blows every other company I looked at out of the water. To summarize, despite a tumultuous year for the world of manufacturing, Aspen have still managed to grow all of the numbers that I care about. Now that gets me super excited. But before we make an investment, let's see what the management team are up to. In their most recent 10Q, Aspen saw a return on invested capital of over 50%. This again blows every other company I saw out of the water. They saw a return on equity of just over 60%, again blowing every other company out of the water. And somehow this number just keeps on growing. They also saw a return on assets of over 20%, which is just insanely high for an ROI in the manufacturing space, and it's double the ROA of Intuitive. These numbers are gigantuous, and it just goes to show that the management team are doing a very good job of deploying capital. Now that's a management team that I want to invest in. These margins are nuts. And just to give you an idea of how nuts they are, I don't usually entertain investments with a gross margin of less than 20%, an operating margin of less than 10%, or a net margin of below 5%. When we look at these, the net margin is more than what I'm looking for in a gross margin. That's a hell of a lot of profit being reinvested back into the growth of the company. Now, as much as I'd rather have my teeth pulled out, it's not proper due diligence without looking at the company's debt and cash flows. So let's take a very quick look at the company's balance sheet. They have a reasonable amount of cash. They don't have an unreasonable amount of debt. They're managing the debt well, and they have a reasonable amount of surplus. Moving on. Now, before we look at the price, it's important that you understand my buying strategy because it may be different to your buying strategy. Anything I buy with the intention of holding for 5 years or longer. The share price could go up, down, left or right in that time, provided the general value of the stock is appreciating at double-digit rates. If you're someone who is fazed by short-term market volatility, or you have a different investing strategy to me, maybe rethink buying this stock, or maybe do your own due diligence to make sure it's a stock that you want to buy. At the time of this recording, Aspen is trading with a PE of 39.01, which is 10 points above the S&P at 29.46, and about 5 points above the technology sector and about 1 point above the industry sector. In this market, when exponential growth beyond a 5-year time horizon is factored into the price, I think this is a very reasonable price to pay. So I've paid it. You may want the price to fall down to a PE which is more in line with the technology sector, so low 30s, but in either case, I think it's a stock that's going to appreciate in value over a 5-year time period. Now let's take a real quick snapshot of my current holdings. This is a portfolio I started around 2 months ago when I began the channel. Right now I'm averaging around a 6% return, which is affected significantly by the drop in price in Cena. Having said that, I'm reasonably confident Cena is going to see a very healthy return over the next 12 months. With regards to ServiceNow and Conagra, they're recent purchases, so I'm not expecting big things right now. Give it a few months, and I'm sure they'll start appreciating in value. I'm reasonably confident that all of these will see consistent and in some cases aggressive growth over the next year to 5 years. Right now, I have no major plans to sell off any of my positions, but I am looking at Proto Labs thinking, is now the right time to release some capital to invest elsewhere? And if I do that, I'll let you know. Guys, thanks for taking the time to watch the video. I really appreciate it. If you've got any questions, comments or feedback, please leave them below. Alternatively, if you have an industry you want me to look at, I'll be more than happy to do it because I'm always looking for the next investment opportunity. Happy investing.